Every month, the same story. Paycheck comes in, paycheck disappears. Rent, groceries, credit card minimums, gone before you even blink. You feel it, don't you? That pang of why not me? Dopamine spikes when you see it. A friend posts a vacation, a coworker flaunts a bonus, and your brain screams, I need it too. But here's the trap most never see. It's not just money you're losing. It's your future. Every little indulgence trains your brain to crave instant rewards. Your income? Linear. Your spending? Exponential. That gap widens every month. Meanwhile, inflation quietly eats your dollars. That $100 today, worth $95 next year. And debt, sweet, seductive debt, credit cards, personal loans, they promise freedom, but they're handcuffs disguised as wings. This is the first trap. The one almost every investor falls into before they even buy a single stock. Living in the scarcity loop. Chasing dopamine, ignoring compounding, letting debt dictate life. Most people never escape it. But some notice the pattern. They see the gears turning behind the curtain. They ask the right question. How do I make money work for me, instead of disappearing the moment it touches my hands? Tomorrow, we'll uncover the next trap, the illusion of income, and why your paycheck might be your biggest enemy. You work hard, 40 hours a week, sometimes 50. The paycheck comes, and you breathe a sigh of relief. You earned it. You deserve it. But here's the hidden truth. Your paycheck is a mirage. It feels like power, but it's actually a leash. Every hour you trade for money is an hour the rich don't spend. They make it work for them. You sell your time over and over, just to cover last month's mistakes. And the illusion doesn't stop there. Raises feel like freedom, bonuses feel like victory, but inflation and rising expenses silently steal most of that gain. That new salary? It just buys what you were already struggling to afford. You're moving, but staying in the same place. Then there's the subtle trap of lifestyle creep. You get a little extra, you spend a little extra. A nicer car, more dining out, a bigger apartment. Every upgrade feels earned, but it quietly chains you tighter to your paycheck. Most investors never realize it. They think building wealth means earning more. But it's not the money coming in. It's the money that works while you sleep that counts. Some notice the pattern. They start asking, what if my money could earn me hours, days, years? What if I could escape the illusion and make my income truly infinite? Every notification, every alert, every little ping from your phone. It's a tiny hit of pleasure, a rush of dopamine. Likes, shares, crypto price jumps, it feels like winning. But here's the dark side. Your brain doesn't care if it's real progress, it only knows the thrill. And you start chasing it. Quick wins, instant gratification, day trading, flashy investments, anything that promises a rush. Meanwhile, real wealth is quiet. Compounding is slow. Dividends drip in like clockwork. Interest accumulates patiently. Businesses grow steadily. No alerts, no dopamine spikes, just time and consistency. Most investors fail because they confuse excitement with progress. They sell too early, chase trends, buy the hype, ignore the fundamentals. And every time they do, their brain rewards them with a hit and a loss, a double punishment. Some people see it. They realize dopamine is a liar. The rush of almost rich is just a trap. True wealth isn't exciting. It's relentless, boring, patient. And it compounds while you sleep. Tomorrow, we'll uncover the credit card trap. Why borrowing for instant pleasure can ruin decades of your financial future. It starts small. A dinner out, a new gadget, a just this once purchase. You tell yourself you'll pay it off next month. But next month comes, and you can't. Minimum payment. Interest piling up. The balance grows like a shadow you can't shake. Each swipe feels harmless, but every statement is a reminder. Your freedom is shrinking. Most investors fall here. They think debt is temporary, manageable, even clever. But debt isn't neutral. It's a silent tax on your future. Every dollar owed is a dollar that can't work for you, can't compound, can't grow. It's your time, stolen. And here's the cruel twist. The more you try to fix it, the more trapped you feel. Paying only the minimum? It stretches out for decades. You start earning more, but spending more. The cycle never ends. Some people see the chains. They freeze their cards. They learn to distinguish wants from needs. They focus on building assets, not liabilities. They know the moment you hand your money to debt, you hand your future too. You've saved. You've worked hard. You feel safe seeing that number in your bank account. But here's the catch. That number isn't static. Inflation is the quiet thief that slowly steals your purchasing power. What buys you groceries today may barely cover half of them in 10 years. Most investors ignore it. They let their cash sit idle, thinking a savings account equals safety. Meanwhile, every month, every year, the value erodes. Your money works, but against you. And here's the psychological trap. Seeing numbers grow in your account feels good. You think you're winning. But growth that doesn't outpace inflation? It's an illusion. You're standing still while the world moves forward. Some people notice. They invest. Stocks, businesses, assets that appreciate faster than inflation. They understand the difference between cash in hand and wealth that multiplies silently over time. You've heard it all your life. We don't have enough. Money is tight. Save every penny. At first, it sounds practical. Smart even. But living in scarcity, it rewires your brain. Every decision becomes survival, not growth. Every dollar spent feels like a battle. Every opportunity missed feels catastrophic. Most investors never escape this mindset. They scrimp and save, yet never invest. They fear risk, ignore opportunities, and watch the world move past them. Scarcity doesn't just limit money, it limits vision. And here's the cruel irony. Even when money comes, scarcity makes you spend it on temporary relief. A small thrill. A treat. Anything to soothe the feeling of never enough. The trap is psychological, but the consequences are financial. Some people break free. They rewire their thinking. They see money as a tool, not a lifeline. They plan for growth, not just survival. They understand that escaping scarcity isn't about earning more. It's about seeing more. You work. You grind. You trade hours for dollars. Week after week. Month after month. It feels like progress. A paycheck arrives. You're moving forward. But here's the truth. Your income is a straight line, flat. No matter how hard you push, there's a ceiling. You can't print more hours in a day. You can't stretch the week to 168 hours instead of 168. Meanwhile, expenses climb. Credit card bills, rent, taxes, every month they rise faster than your paycheck. Linear income chasing exponential spending. That's a race you'll almost always lose. Most investors never realize it. They chase raises, they take side gigs, they work harder, but never smarter. They never let money itself multiply. Some notice the pattern. They shift focus. They invest in assets that earn while they sleep. Stocks, businesses, rental properties, things that expand wealth without expanding hours. That's where true escape begins. You work all month, hand over your paycheck. And for what? Rent. The biggest line item in your budget. Every month it disappears, like sand through your fingers. Most investors never notice the trap here. Rent isn't just an expense. It's a barrier. Every dollar spent on rent is a dollar that could have been invested, compounding quietly in stocks, businesses, or real estate. Instead, it vanishes. Permanently. And the pain is subtle. Rent feels normal. Everyone pays it. But the rich don't. They own assets. They create income streams. While you're paying someone else's mortgage, your future is being delayed, decade by decade. Some people see it. They start building equity instead of paying endless rent. They invest in property, in business, in assets that work for them. They realize freedom isn't earned by surviving. It's earned by owning. You hear about it all the time. This stock is skyrocketing. Crypto is the future. Everyone's making millions. Your heart races. You feel the pull, the thrill, the fear of missing out. Dopamine surges. It feels like opportunity, like freedom. But here's the trap. Excitement is a liar. It rewards action, not wisdom. You buy in at the peak, chase the hype, ignore fundamentals. And when the rush fades, so does your money. Most investors fall for this. They chase trends instead of value. They trade emotions instead of strategy. And every loss, their brain interprets it as punishment, pushing them to chase the next quick win even harder. Some people see it. They step back. They value patience over thrill. They invest in quiet, consistent growth. The compounding that doesn't flash on social media, but builds true wealth. Tomorrow, we'll explore the inflated lifestyle trap, Why spending every raise keeps most people trapped in the paycheck cycle, no matter how much they earn. You get a raise, a bonus, a little extra cash, and immediately life feels bigger, better. A nicer apartment, a fancier car, more nights out. The thrill is intoxicating. But here's the trap. Every dollar earned above your base disappears into your lifestyle before it can grow. You're upgrading your life, but not your future. Most investors never realize it. They think earning more solves problems. It doesn't. It just raises the bar of their expenses. More money comes in and goes out faster than ever. That paycheck cycle tightens like a noose. Some people notice. They resist the temptation. They invest the extra. They let money build momentum instead of spending it immediately. They understand that freedom isn't about bigger toys. It's about compounding wealth quietly and visibly, relentlessly. You swipe your card, you think, I'll pay it off next month. It feels harmless, convenient, smart even. But here's the hidden danger. Credit is an illusion of wealth. It lets you live beyond your means, creating a temporary sense of power. Every purchase feels like progress, but it's actually debt quietly chaining your future. Most investors never see it. Minimum payments, interest compounding, fees piling up. Each month, the illusion grows stronger and real wealth grows weaker. You're trading freedom for fleeting comfort. Some people notice. They break the cycle. They use credit strategically, not emotionally. They make money work for them, not the other way around. They understand. Borrowing for pleasure steals decades of compounding before you even realize it. You're busy. Always busy. Meetings, emails, side hustles, errands. Every day feels full. Productive. Important. But here's the trap. Being busy is not the same as building wealth. Trading every hour for money keeps you stuck in a cycle that never scales. Time is finite. Your hours are your most valuable asset. And most investors spend them on things that never create lasting value. Most people never notice. They think working harder equals getting ahead. But harder work without leverage, without assets that grow independently, is a treadmill. You run and get nowhere. Some people see it. They leverage time. Delegation. Investments that earn while they sleep. Businesses that expand without them. They understand. True wealth multiplies your time, not just your money. Tomorrow, we'll dive into the fear trap. Why fear keeps most investors frozen, letting opportunity pass by while others quietly build fortune. Fear is quiet. It creeps in slowly. What if I lose money? What if I make the wrong choice? What if I fail? Most investors never act. Not because they can't, but because fear freezes them. They watch opportunities pass, paralyzed by what-ifs. Meanwhile, others take calculated risks, quietly building wealth while the fearful stand still. Fear keeps people in the paycheck cycle. It keeps money in the bank, safe but stagnant. It keeps them renting, leasing, borrowing, trapped in survival mode. Some people notice. They embrace risk intelligently. They study, plan, and act despite fear. They understand that fear isn't the enemy. It's the signal. Fear warns you to prepare, not to freeze. You've invested time, money, emotion. You tell yourself, I can't quit now. I've already put so much in. That's the sunk cost trap. It makes you cling to losing investments, bad businesses, or destructive habits. You keep pouring resources into things that drain you, believing past commitment justifies future risk. Most investors never escape it. They hold, hoping for a turnaround that never comes. Meanwhile, their money and time could be working somewhere else, compounding quietly, growing steadily. Some people notice. They cut losses. They redirect resources to assets that actually grow. They understand. Past losses are lessons, not chains. True wealth comes from action, not stubbornness. You feel confident. You've read the charts, studied the trends, followed the experts. You think you can predict the market, control outcomes, beat the system. But here's the harsh truth. The market isn't yours to command. Volatility, inflation, recessions. They don't care about your strategy or your confidence. Most investors overestimate control and underestimate randomness. This illusion is deadly. People hold tight to failing positions because they know it will rebound. They double down, convinced they can outsmart the system, and the system wins every time. Some notice. They respect uncertainty. They hedge, diversify, invest in fundamentals. They accept what they can't control and focus energy where it actually matters, building assets that grow over time, regardless of chaos. You read the news. You follow the experts. You join the forums. Every source seems to confirm what you already believe. It feels safe, comforting, smart. But here's the trap. Confirmation blinds you. It narrows your view. You ignore warnings. You dismiss evidence that doesn't fit your story. And in finance, ignoring reality is deadly. Most investors fall for it. They hold on to stocks because their favorite guru says it's a sure thing. They ignore signs of trouble because it doesn't match their narrative. And when the bubble bursts, their money disappears along with their confidence. Some people notice. They seek dissenting voices. They question assumptions. They challenge beliefs. They know wealth comes from clarity, not comfort. Tomorrow, we'll uncover the comparison trap, why measuring yourself against others quietly erodes both your focus and your finances. You scroll. You look around. Friends, colleagues, strangers on social media. Everyone seems ahead. Bigger houses, fancier cars, flashier vacations. It hits you in the gut. That nagging feeling, I'm behind. Dopamine spikes, envy kicks in, and suddenly your decisions are no longer about building wealth. They're about keeping up. Most investors fall for it. They chase lifestyles they can't afford. They buy on credit. They make risky investments just to match someone else's success. And every month, they fall deeper into the paycheck cycle. Some people notice. They stop comparing. They focus on their own path, their own compounding, their own assets. They understand that wealth is personal. Growth doesn't happen in public. It happens quietly, consistently over time. You think you know. You've read the books. You follow the trends. You believe your instincts are sharp. But here's the danger. Overconfidence blinds you. You underestimate risk. You overestimate skill. You believe the market bends to your will, and the market doesn't care. Most investors fall for it. They take bigger positions than they should. They ignore warning signs. They believe losses are temporary because they know better. And every mistake costs more than the last. Some people notice. They check ego at the door. They plan, diversify, and hedge. They understand that humility isn't weakness. It's a shield. Wealth grows when decisions are measured, not when pride rules. You check your portfolio every hour, every day. Prices rise, prices fall. Your heart races. You feel the thrill of tiny wins and the sting of tiny losses. But here's the truth most investors never see. Obsessing over the short term destroys the long term. Compounding doesn't happen in minutes or months. It happens quietly, over years, decades even. Every small distraction, every impulsive trade, chips away at potential that could have grown into something unstoppable. Most people never escape it. They measure success by instant gratification. They chase trends, tweets, and headlines. And when the bubble bursts, or the fad fades, they're left exhausted, poorer than when they started, wondering where it all went wrong. Some people notice. They shift perspective. They stop reacting to every ping and alert. They focus on assets that grow quietly. Stocks that pay dividends, businesses that scale, investments that multiply while they sleep. They build systems, not fads. Patience becomes their superpower. Time, their ally. And here's the secret the wealthy understand. Escaping poverty and building real wealth isn't about luck. It's about breaking traps. Credit, dopamine, scarcity, fear, overconfidence, comparison, and making money work for you, not against you. It's about thinking decades ahead while the world chases today. The path forward isn't glamorous. It's quiet, disciplined, relentless. But every dollar invested wisely, every habit reshaped, every risk calculated brings freedom closer. Most investors will fail because they ignore the traps. Some will succeed because they see them, respect them, and act differently. The question isn't whether the system is rigged. It's whether you're ready to play the game by the rules the wealthy already know.